Good evening, Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 9th of February, 2023, just getting on to 7 p.m. Central Time. I'm late because I've been thinking so much about what today was. You know, if you get my full written research, this morning for the 11:30 written update, and I think I published at 11:26, I warned my traders. I said that we have 3 stock indices that have bullish embedded readings, and they're all on the verge of losing them. We had the S&P, we had the NASDAQ, and we have the, I think it was the Russell at that time. The Dow wasn't there. That wasn't part of it. It wasn't embedded. I said, they're on the verge of losing it. You got to be careful. They might be headed back to the 18-day average if that happens. Guess what happened? They all lost it. So we could be headed there. This could be a bit of a correction. Do I think it's a major top? I don't know. You never do know. What I know is that getting to the 18-day average, if you get down there, that's the first step of having a downside correction. And it's interesting when it came in. You had more bullish news today in the sense that unemployment claims came in 196,000, the continuing 38,000 up. That's what the market wants to see, a little bit of growth there. We've had great surprises on some stocks to the upside, Disney being one of them, and we keep seeing more and more companies are announcing layoffs. I found that all interesting. The government's cracking down on the Bitcoin companies that take in tokens. And it's basically a way that you loan out you loan to the company your Bitcoins. They pay you a certain amount of interest. The exchange takes it, and the government's decided that's a security. So the government went after Kraken. They settled for $30 million. Now they're after Coinbase with the same issue. That'll stop the growth of those things because that was one of their main growth engines. So I've always wondered why it wasn't considered a security to begin with when they do that. And I think the government understands that it actually is. But I'm concerned with the action. You're in a battle of a lifetime between is the Fed... as the market says, the market thinks the Fed will not stay the course for this year, and the Fed members all say the Fed is going to stay the course, and they're going to keep raising interest rates till they have to stop. Mexico surprised the heck out of the market today. I mean, I was blown out of my chair. They raised their interest rate 50 basis points. That wasn't in the cards. They were supposed to be pretty much sitting steady. And 50 points, the market took off to the upside. But why'd they do it? Because they're frustrated that inflation and food costs and the like aren't going down. And they want to put a crimp on it. Well, there's a lot of us that are seeing that. And I think that, we've got that here. Maybe in their economy, they hit that point of inflection where you get sticky inflation. Everybody's a little bit different. Remember that. And that's what they had. So when I look at the S&P, for the week, we're down 1.39%. When you look at the chart here, it's starting to roll. You now have lower highs, lower lows. That's bearish. So until you take out the highs back here of 4179.5, the market's in a down thrust. And I said, I think you might make it to the 18-day average. Did this morning. And when I said it, the market was higher on the day. And then it fell apart. When we come over here, you see that where the market's run into troubles, the Bollinger Band, that's been the zone. And the momentum, you lost that embedded reading. Game over. So you got one there. NASDAQ lost the embedded reading. So before you get back up here, I think you're going back to 12,179. You lost it in the Dow, but you haven't had it. I can't even say you lost it. You haven't embedded. You've just been stuck every day at the 18-day average, and I pointed that out to you day after day after day here, and you lost it in the Russell. You can see that back here, and now you're down to the 18-day average. So you may not agree with me with my enhanced Bollinger Band course. Learn it. It helps. You have a lot of outside days in different markets happening right now. This action today did that. Do you know how to work with outside days? If you don't, what you should do is move your cursor up here and get into the word education on my site and take those 2 courses, the enhanced Bollinger Band and the outside day. They might help your trading. In the T-bond market, we've latched on with today's action and an outside day. That's why I'm bringing this up. It's a continuation pattern. How deep does the market want to break? There's a way you know that it's a false move and that will be in taking out this high within a certain period of time. Barring that, it doesn't matter. And we're now saying, hey, maybe new lows are coming, and look where you carry to in the 10-year note. I was looking again for the Bollinger Band and the 100-day average, and bingo, they're both together. We then come to the March dollar, and it keeps having trouble here at the 18-day average, but it too had an outside day down. So the dollar down, let me understand this, and other currencies didn't go up. So what's going on? And yet gold fell like the dollar was stronger. We'll see. The market got spooked today, big time spooked. When you look at the eurocurrency, you have a market that's in a corrective stage. Higher lows, higher highs, and if you step back to today, you had an outside day up. How do you work with that if today's low's taken out? I know, learn. It's very important. British pound. You've been getting a correction off an oversold market that got down for the first time to the 200-day average in the Bollinger Band, and that's given you the bounce in the market. You haven't changed the trend of the market, but it is oversold. Ideally, it'll work out of that by getting enough of a rally to get these numbers up and over 30, and then we can take another look at possibly the sale. When you lost the embedded reading right here, and I had my clients long this market, by the way, can prove everything I'm saying. We lost the embedded reading, and I just said it was time to come out. Maybe you'd go to the 18-day average. And that's what you did. I mean, if we take a look, this was the play that I was looking for. You hadn't quite hit it. And I've been waiting for it to be hit. Today's the first day that it hit it. But when you lose the momentum, what the market's saying is you want to come and run out of these markets. So for the traders, I was telling them to buy QQQ as an example on the ETFs and other markets. Today was the day you got to go bye-bye. I want to be sidelined and walk away from that. As we look at the Brent versus WTI, it's not going to go anywhere until we see in these energies that really China's stepping back into the market. We know India's been there buying an awful lot of the oil. And, you know, today OPEC came out and they said, hey, we are not going to lose India as our client. We're going to keep it. It's sort of a slap in the face to, obviously, Russia, who is selling at a deep discount their oils as much as they can to India, to China, whoever will buy it, because the Russian offensive has picked up. So Russia's now done what we talked about. They're not going to wait for spring where their tanks and everything else get mired in the mud as the ground breaks. Now is the time for the offensive, and our allies aren't giving what Ukraine needs, which are their tanks to do it. It takes time to train them, and I understand, but it's like the writing on the wall. It doesn't take a genius. All you're going to see here is make your move, make it now, and go fight with that. We then take a look, and let's go to the next chart here. This, by the way, is the WTI. It's the same thing. You rallied into the resistance, but you're void of a trend in these markets. You have a lower and low, higher high. If we take a look at Brent, lower and low, higher high. They've ended downtrends, but they have not been able to add to an uptrend. In the gasoline, what I want to see is happening. I want to see the market now spin around under the 18-day average of closes and this 200. And when it gets over it, do it from a level that's tighter. This is too wide. Where would you put a stop? You need a tighter range, and then maybe that can take off. Now, my special report on gasoline is history. My reports are up 3 business days. If I put them up on a weekend, you get the weekend with it. But 3 business days is what they're there for. So it's gone. I hope you enjoyed what you saw, because I think it's interesting. I think we're there. Not yet to buy it. I think we're there and getting the patterns starting to set up. Natural gas still bearish as can be. Now, the Freeport area in Texas was given the okay now to start the process of loading up the tankers, and that's good, so they can start loading. Now, that's not for the rail cars yet. That's coming. So the government made it clear they can start that. It'll probably take to the end of March for them to get normal, but we're going to see oil actually go out. And remember, 2% of the nation's oil, the equivalent comes, not oil, but natural gas, gets out of there. So it's very, very important what goes on. We want to see that come alive, and they can even get to bigger numbers as we look at that all. So I think that what you have to get away from tonight and understand is the battle is here between Fed, is it going to do it? I'm in the camp that the Fed will be strong and go the whole route. Other people know it's not going to happen. They'll push the economy into a recession. I have a problem with that for one reason. Labor is too strong. Now, if they can get labor to really wobble, I'll change my opinion. But when you're doing this and you're still at pandemic lows, 196,000 on the claims going up 16, it's not rattling me. It's still a very strong labor market. And I've yet to see that happen, but I'm going to scare you. There's a great history of the 10-year yield, and when it inverts the way it has, and you get into the 80s as an example, history says you got a recession following it, and it's been inverted for a long enough time where there's a time lag, and maybe that lag is coming on top of us. Again, you want to go to the courses, just move your cursor up here, go to the courses. That's the way to do it. I'm Ira Epstein. I'll see you all tomorrow or in my Spider ETF or Metal video if you move to those. Have a good day.